how we can get 30% extra income tax deduction in our business legally, given by the finance ministry of the government to us. My name is Arpit Arora. I'm India's leading personal finance expert and passive income coach, and I'm on that quest to change the middle class of India and transform their financial life in such a way that they are able to have the potential to follow their passion. They have the focus to follow their passion. They are not distracted by money because they're creating enough passive income, and most importantly, they're able to live with inner peace and joy. And that, my friends, happens by winning the game of money. That happens when you upgrade your financial IQ, and that most importantly happens when you are committed to achieve financial freedom in your life, because it cannot happen without a commitment. And it is my commitment to make sure you get all the support that you need to walk and achieve that destination. How can we get an extra 30% income tax deductions in our business? Okay, this is for business. How we can get 30% extra income tax deduction in our business legally, given by the finance ministry of the government to us. Are we availing it? Let's start talking about that. So I'm going to take you on my screen and I'm going to talk to you about the section of 80JJA, which is unknown to most people. The section of 80JJA, what does it? What are the deductions, applicability, calculations, and an example? So you can understand this. So it's a provision by the Indian Tax Act 1961. The deduction is to the employer, means the business owner, who is generating employment in the formal sector. Okay. It is against the income of the business for an assessee who has hired additional employees. So it's for additional employees. If you have the same number of staff from one year to the other, you don't get this benefit. If you've added more people, then you're going to get this benefit during a fiscal year. Allows the employer to claim deduction up to 190% of the additional employee cost incurred while employing new eligible employees. So this is the max limit. The purpose of this is to encourage employers to generate more employment opportunities in India. So haven't you been hearing this? Ki Modi government was coming under fire for people being unemployed, especially during 2020. So this is one of the ideas they came up with. Okay, so the government's aim is to incentivize the employers to hire more people and reduce the rate of unemployment in the country. Now, applicability, how does it work? So this deals with the deduction of profit and gains from the business. You can get a deduction of 30% on the additional employee cost for 3 consecutive years. So if last year you had 10 people, now you have 15. Of those 5 people, the extra money you're paying for those 5 people, uske upar you get this benefit. So 30% of the extra people or the 5 people on which you're hiring more, unke upar 30% you'll get this benefit. So what are the prerequisites? First, you need to file an ITR within the due date and submit the CA report in form of 10DA. This is the compliance part. The business should be solely yours and not acquired by any other person. Okay. It should be the result of a business reorganization. So you should not form a business by splitting or reconstructing any other business. So they're saying business restructuring allowed nahi hai, pure business aapka apna hona chahiye. Now deductions kaise milenge? So deductions ke liye 30% additional employee cost which is incurred in the business, that is the extra deduction that is available. Obviously, the total employee cost, you're putting that as an expense in your business. But the 30% of the additional cost that you're bearing is a deduction that you're getting on top of that. This can be calculated as a difference between total employee cost in one year versus the other year. Okay. Now, determination kaise hoga of additional employee cost? People and should be based on following parameters. Now, these are constraints you need to understand. Employees should earn a total salary of not more than 25,000. So this is only applicable to low salary income earners. They should be employed for more than 240 days in the previous year. Okay. The employee should have a particular recognized provident fund like casual workers. And the government shouldn't have paid contributions in their EPF. These are the 4 parameters on the basis of this should be done. You can get this if a business is operational for more than 240 days in the previous year, if you have employed at least 10 people in the previous year, and the business shouldn't have claimed this deduction in the previous year already. So in this case, you can get this extra saving. And any further on this, obviously, I feel you should consult your own chartered accountant.